Alright, hello guys. So this is an entry model video, so I'm just gonna run down through entry models I take and what confluences I use to take them. Alright, so we'll start with so we have what the hell happened there? Yeah. So these are break structure continuation models. This is what I've been mainly taking. So we have a break structure, so price lower low. Higher high, higher low, and then higher high. So this is a break structure. This then becomes a protected low. And then on the charts, you'll mark out your demand zone near at the protected low. So we'll just call a precise 15 minute. Oh no, we can just do this. I'm gonna go to demand. Wait. So like this. And then we have inducement built up, which validates this demand zone. So inducement is just a form of liquidity basically. It's just where buyers or sellers induce into price too early before price actually gives the actual move before continuing the overall direction. So yeah, and then you would take something off here. And target highs. Something like that. Alright, that's setup number one. That's your break structure continuation model with inducement. Then we have this one where it's break structure low. No, it's not like that. It'll be let's restart. Yep. Yeah. Yeah, and then like this. Just that. Alright, so what we have going on here is price. We have a break structure. Protected low. And these setups can be the same for downtrends. So if it's like a downtrend, protected highs and break structures down. It's just an uptrend, and you can just flip it for a downtrend basically. So, and then we have what's called imbalance, or other it's known as a fair value gap. In I think ICT, I think. But yeah, imbalance. Basically imbalance. That confluence. Is basically where buyers or sellers there's an unfair balance in the market, and where they move price too far in one direction, and doesn't give equal opportunity to the other side of the market, meaning price has to basically come back down to that liquidity or imbalance and remitigate the orders before continuing in a given direction. So yeah, demand. So imbalance or fair value gap, whatever you use. It's the same thing. So this is the imbalanced breaker structure continuation model. And you would enter off this. Total highs. Alright, next model. Next model. This one uses both imbalance and inducement. So this. So same thing, breaker structures, we get a new high, put it in. Low that caused that new high, and protect the low. And then we get a demand. Yeah, at the protected low. And then this demand is then validated with these confluences because we have these two types of liquidity, which is inducement, where buyers or sellers induce into the market too early for the actual given movement occurs. And then also imbalance, where prices move too fast in one direction, giving unfair distribution on price, meaning buyers or sellers couldn't get in time, so the price eventually has to refill that imbalance, mitigate it again. Acts as like a price magnet. And something like this. Something like this. Stop us a protector low, and then you target the highs. Just like that. Alright. So they're my three main entry models. Now, what's I've seen some people do, they just bloody break a structure and just enter off this. But the problem with this, break a structure, protect the low. The problem with this is they enter straight off a demand, but it has no confluences, so you got no imbalance or inducement. And the zone isn't actually validated, basically. So there's no reason for you to be entering, because there's no liquidity validating the zone. So it's just a, hold up, that's the wrong one. You're just entering a zone, but it's going not no inducement or no imbalance, then the zone's not really valid. Now there is one other setup. I'll do the big cross. No, you don't want to be doing that. You always want to look for confluences that validate your zone. And you want to look for logical reasons to analyze why price might do something or why it needs to come into the zone. Not just entering off it because it's just the nearest demand you can find. Now, there's also this one that I've seen play out. It rarely plays out, but it's still possible. It's. Oh my god, hold on. Hold your horses. Like this. Like this. Price doesn't come to the protected low, but does this. So that's where price, instead of playing off a demand, plays off imbalance. Actually, no. There's one better. Because you need a reason to be entering off the imbalance. So, hold up, let me redraw that. You want it like protected by structure. Alright, here's the entry model. But there's actually inducement for the imbalance. So liquidity build up for the imbalance. So there can still be demand zone here, but because we have a liquidity build up for imbalance or fair value gap, it can still be valid. But these rarely play out, what I've tested. You're better off waiting for a protected high or low zone because it's higher probability. And yeah. Oh. Alright, so these are my entry models. So you got these are breaker structure continuation entry models. So you got that. You got just with inducement. You got just with imbalance. You've got with imbalance and inducement, or you got, and these are with just your supply or demand zones, whichever trend. This is an uptrend, but imagine if you're doing a downtrend, it's just flip basically. Protected low becomes protected high, and demand zone becomes supply zones. Or you got this one, it rarely plays out, but if the thing is, if your stock can somehow cover like the protected high or lows, and if you have collected data and it's not too bad, but I hardly take these. I've only taken like these sales like 3 times this year. But yeah, inducement build up for an imbalance, and then for that. But yeah, so yeah, these are my continuation entry models. So yeah. So yeah, let me comment in chat if you got any questions. I can just help you out. But yeah, I can give you some examples of these on live. But yeah, too easy. Cheers.